The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome to the Diagnostic Trading Hour with Darrell Martin and TFNN. Make sure if you want to tune in, you can also tune in at tfnn.mobi. From your mobile phone, you can listen in everywhere. And it's just a great feature that we've added on the website, so make sure, again, tfnn.mobi. And if you have any questions, feel free to call in. You can reach us at 1-877-927-6648. Again, that's 877-927-6648. Outside the U.S., 727-445-1044. And right now, taking a look at the markets, they are definitely up. And we got the S&P up 12 points on the day. We got the Russell up 11. We got NASDAQ up 31. And we got the Dow up 84 points. Oil's also climbing along with everything else, up $1.68. And if we look over at the euro dollar and pound dollar, they're starting to edge up as well. Commodities actually sliding a little bit over on the corn and soybeans, but we do have several other commodities moving, so we'll be looking at those as well. And just make sure you're staying in tune with the markets there right now. Like I said, the market is definitely moving up, and I think there's a very strong possibility, unless any crazy news, can't expect that, right? Crazy news out of Europe, that August actually may be a very bullish month. It may even be one of the bigger record-breaking months for August. August is usually a bearish month. But with a lot of the bad news out of the way and supposedly a plan, the bazooka option on the table right now for Europe. And if you don't know what that is, basically the bazooka option is where they're looking at making a monetary policy with unlimited ability to fund. And that's, of course, coming up. And then you got the Jackson Hole coming up and, all that stuff that's happening this month where Bernanke's going to be talking. Everybody's going to be listening in for QE and see what happens there. You got Romney saying, hey, don't do QE, but, everybody's expecting it in September. We'll see how that goes. But with all the earnings reports that are out, we're basically at the end of earnings season right now. And, there'll be a few companies we'll have to report, but we've wrapped up most of the earnings. And, with the jobs report that came out last week, that really triggered off the big boom. And, we'll see how it keeps going. But we got that big up move. We got basically a flat day yesterday and another big up move today. And I think we'll just continue to see that over the course of the next month. Now, the big key factor, okay, is going to be right there in the middle of September. So we're going to have so many things come up. The debt ceiling is going to come up. We're going to have the Fed funds rate come out. And we're going to have the German Supreme Court decide whether or not it is constitutional for Germany to basically take on the debt of other nations by allowing the whole fiscal union. So if that stuff goes well, then we'll obviously see a big rally into the end of the year. We could easily see the Dow, climb up dramatically. And the S&P could touch 1,500. The Dow could literally climb up to 14,000 before the end of the year here. So we're going to see how it goes. It's sort of interesting looking at this isn't necessarily a political stance, but Romney's making $2 for every $1 as far as capital raising in the elections go, and it seems that the better he does in the polls, the more the market likes it and it starts to climb. So, of course, basically right now he's touting, low taxes and lower regulation and basically get the government out of the way and let the market do its thing. And the market seems to be liking that. So, who knows? We'll see how it goes. But, we'll stay tuned and we'll watch it step by step as things progress. And just to go ahead and look at the fundamental diagnostics that are going to be going on this week, we have Mr. Bernanke himself is going to be talking here in about an hour and 20 minutes. So definitely, stay tuned on that. He starts at 1:30. And, you want to watch. That's obviously going to, anytime he speaks, the market, moves or, whatever you want to call it. But it does something. And so then we got a few more announcements coming out this week here. So we got tomorrow, several things will be coming out. Bank of England is going to actually release their inflation report. And we got China, I believe, on Thursday is going to be releasing, a lot of very important reports on them. So we're going to see how the China report goes. And the Aussie dollar is going to have their employment change and unemployment rate coming out. So if you're a Forex trader, then definitely be watching for that report. That's going to come out at 8:30 p.m. Central, 9:30 Eastern Time. And over here, in the U.S., pretty quiet for the day, except for we will have a few reports out in the morning on tomorrow morning, we're going to have the preliminary non-farm payroll, quarter-over-quarter, unit labor cost, quarter-over-quarter, crude oil, and 10-year bond auctions. So that preliminary non-farm payroll, it's not as, obviously, near impactful as the regular non-farm payroll, but it definitely is something to keep your eyes out for. And again, that happens at 7:30 Central, 8:30 Eastern tomorrow. And Thursday, we're going to have a few reports coming out. Beka Japan's going to have their press conference sometime on Thursday. They haven't actually set the exact time. And we'll have several other things going on as well. One of the things that we'll see on that is, obviously we're looking at the U.S. yen tomorrow, or not tomorrow, but Thursday, for when the Bank of Japan does have their conference. And, of course, we'll have our regular Thursday unemployment claims, which everybody is watching like a hawk, just to try to see, is that going to continue to tick up or tick down? And I think it's a few 100,000 more jobs, and basically the unemployment jobs gained, lost will be equal, even though we'll still be down 8 million jobs if, Obama's able to, get that margin back to pretty much zero by his election cycle. There'll still be 8 million jobs down. And then, of course, we get our natural gas storage and 30-year bond auction. Shouldn't really be that big of an impact on the market, but of course it will impact natural gas, and that's every Thursday at 9:30 Central there. So always keep that in mind, 10:30 Eastern. And then on Friday, we got probably a couple of bigger announcements of the week. We'll be having the PPI input and the employment change and unemployment, rate coming out. So in Canada. So that'll be, the PPI will be coming out of Britain, and the employment change and unemployment rate will be coming out of Canada. Obviously, them being a very close trade partner with the U.S., that can have a bit of an impact. But that is going to be, pretty early in the morning. That's going to be 7:30 Central, 8:30 Eastern as well. And, we don't have a whole lot more coming out besides the import prices and the federal budget balance coming out on Friday. So that pretty much wraps up your fundamentals for the week. And, so the next step is, what do you do and how do you trade it? And one of the things we always do here is we talk about Nadex, and we talk about ways, basically, the benefits of trading Nadex and, things that you can do to take advantage of the market. And so if you go over to tfnn.com, and I'll show you that right here, then what you'll be able to do is you'll see a banner on the right side of the page. Click on Nadex, and then when you've done that, click on Create Account. And you can fund an account. It's $100 to fund a live account. And live account gives you access to everything. It's a deposit. You'll have all the features, but you'll have the live, accurate data as it's actually appearing in the market. You can also get a demo account, and it's basically the same as a live account, except for, since it's a demo account, other traders are entering orders, so that can, mess up the bid-ask spread, because they're sort of basically making a market with, fake money. But you can go ahead. It's great to hop on there, test it out, see how it works. It's also the way to learn. It's a lot cheaper to learn on a demo account than it is on a live account. And so you can go in and click, open a demo account. All you have to do once you've done that is fill in your username, first name, last name, phone number, and email address. Hit apply for demo. They'll send you a password within a minute or so, and you can literally log right in. Just hop up. You'll click log in, and I'll log in right now. I'll show you exactly what that looks like when you log into your demo account. And they'll give you $25,000 of funny money that you can play with, so you can actually go in there and do trades. And if you need an extension on that, they're great. Just call them up and let them know, especially, of course, if you've funded your account. And but let's hop on over here. And so what you'll see is all the contracts that are currently available, what's currently trading. And we're going to be releasing a tool here in the next couple of weeks to help you really get through all this information fast and do all the calculations quick. So here at tfnn.com. So stay tuned for that. And what we want to look at is you got two different kinds of contracts that you can trade. You have what's called bull spreads and binaries. These are completely different contracts, okay? A lot of times people are, what is the difference between the two? And the simplest way I can explain it is that binaries are a true-false statement, okay? So on a binary, if I'm looking at a binary on the US 500, then what I'm saying is, by a certain time, such as in this case 2 o'clock Eastern time, the S&P E-mini futures September, notice how it says September right there on the contract, September contract will be greater than 1406. If I believe that's true, then I click on the offer or the buy, and that's a true statement by saying buy, okay? So I'm basically buying into that statement. And so if I bought one, my risk would be $16, and my profit potential would be $84, all right? If at 2 o'clock, when it settles, the S&P is greater than 1406, so really 1406.1 or greater, then I will be able to basically I'll profit on the trade, and I'll actually get an 86, in this case now 80, I guess $4 payout as it's moving back and forth. So I'll get a payout of the difference of my risk in $100. So binaries are always $100, okay? And not all binaries are the same. Binaries on off-exchange markets are completely different, and there's a lot of games played over there. Binaries here are going to be very a lot better payout than most of them out there. Most of them have like an 80%, maybe 100% payout. This right here, this is obviously, a huge payout risk-reward here. If you go in and you look at, okay, if I'm going in and I'm risking, $15. So if I do 85, divided by 15, then basically I'm looking at a 166% payout versus an 80 to 100% payout on non-exchange-based binaries. And Nadex is the only exchange in the world offering binaries. So it's open to U.S. residents. You can hop on there, you can click buy, you hit place your order, and you don't have to wait until it expires. That's another big tip, is you can get out, let's say you buy for 15, and it goes up to 50, because let's say it's sitting at 14.06 here in the next 30 minutes or whatever. You can go in and you could actually sell it at $50. Well, that'd give you a 200% profit on your trade. So you don't need to wait until it gets all the way above 14.06, and then you're just praying and hoping it stays above there until the close of the trade. Just use good risk reward. If you put money up and you doubled that money, would you really feel that bad about taking it off? Probably not. And you may even do something as simple as buy 2 of them and sell one at 50. Okay, so if you bought 2 of them, you risked $30. You sold one at $50. Okay, well now you've removed all your risk. You have $20 in profit locked in, and you have the potential on the remaining one to make $84. So there's a lot of different ways that you can trade the binaries, and another big advantage of binaries is they actually not only do they have the ones that come out every hour, and they start at 6 o'clock Eastern time, and they go through all the way as late as 3:15 or 4:15 Eastern time. And then they'll actually, in the morning, they'll start launching ones every hour. So right at 8 a.m. Eastern time, they'll literally have like a 2-hour binary coming up every single hour. And here, at the end of the hour, we're actually going to see a 2 to 4 binary will pop up. There's also a weekly binary, okay? Weekly is actually where you can buy these as early as, basically 3 a.m. on Monday, and they expire at 4:15 Eastern time on Friday. And this allows you to, if you think there's going to be a big move in the week, so if you think the S&P is going to keep rocket climbing up, or maybe you think it's going to fall back down, you could go in and you could play some trades with very low risk and very high reward potential. And so if you thought the S&P might be above 1425, then you could buy this binary, and you could go down here. And if you thought, well, I think it may go down, I could sell this binary. So by buying and selling 2 different binaries, then you're actually able to do what's called a straddle. And so the market shoots up or down, you're risking, less than $30 total, and you're able to make a $70 profit if you're right on either side of the market. So hold right there, folks, and I'll keep walking you through each of the Nadex products as you come back.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers, where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, folks, welcome back to the Diagnostic Trading Hour. Here with Darrell Martin at TFNN.com, TFNN.mobi. And again, if you have any questions, feel free to give us a call at 877-927-6648 or at 727-445-1044. And what we were talking about when we last left was the binary trades. So binaries are a very cool way to trade. They're a trade, though, that a lot of people make a basic mistake on. Okay? And the number one mistake that people make on binary trades is they go for the really low-risk, high-reward trade because it's so tempting, and they don't think about probability. So they go in here and they'll buy this $3 binary, and they'll go, man, I'll put a few $100 towards that. If I'm right, I'll make $9,700 by the end of the week. And I only risk $300. True. But it has to move really far. So, your probability of making that money is, a lot lower. So you want to make sure you really have a good risk management and profit management plan. And you have to have both. And you do have good risk management with Nadex automatically because on every product, whether it be a spread or a binary, no matter what, whatever you put up on the trade, that is your maximum loss. You cannot lose more than that. You can't get stopped out. The market can go against you. You're still in the trade until expiration. Okay? So it helps you manage your risk. But you also have to manage your risk just simply by, looking at, there's not just money risk, right? I mean, money at the end is the risk, but there's not just money risk. There's also time risk, like how long do I have for it to move? And there's, and then there's movement risk. How far does it have to move for me to be at break even or make money? So you want to look at all three of those areas. How long do I have? How far does it have to move? And what is my risk-reward ratio? All three of those combined. And that's why a lot of times if I'll go in and you can actually trade them directionally with very little money, and you can go in and go, you know what, if this trade moves, let's say the market, decides to do a retracement on the day, and it goes in and let's say the S&P wants to drop, 6 points, okay? So the S&P is at 1402 and it drops down, like I said, if it drops down 6 points, what would you make? Well, if I went on this binary right here and I sold it, then I would actually be able to make, over $40 on an $11 trade. So if I sold the trade for $11 and I bought it back for $53, the way I do is I just flip down right here, go down to $53. So and so that would be, a trade that I could take advantage of on there. And then of course I, want to make sure I choose the right trade that's going to work the best for me. And so I'd actually choose like the 1377, and just to make it easier for you there. So maximum loss to 13, and then again, if it moves 6 points, then I just go basically 2 strikes up. How do I know that? Because I look over here and see how these are separated, and basically you look at the separation levels, and I can go, what's the difference in price? Now you also can go over here and do the same thing on the 2 o'clocks, the dailies, and you can just look at, what's the difference in the strike prices, and that helps you know. Now this, again, that doesn't factor in time, that factors in movement. So do you think the movement's going to happen by that expiration time? If it does, then what could you take profit at? So if I could get in and risk, a simple amount such as, $13, and then I could get out for, $50 from a $6 move, because I could actually, go in and buy this back here at $59.50 after selling it for, 13 or $86.50. So $86.50 and buy it back for $59.50. Then I go in and make about $30 on the trade, risking $13.50. That's a good risk-reward ratio, and I'm not waiting until expiration to be right. So again, don't always plan on that waiting till expiration. Yeah, it is cool to get the big payout when it happens. If you're going to do that, then do a multiple. Do 2 or 3 or 5 or 10 contracts, and sell off enough to cover all your risk on all the trades that you put on in that lot, and then also make sure you make some profit. Ideally, double whatever you put up at risk. So whatever that amount needs to be, make that happen there. And then the other amounts you can leave on, whether it be, 10% of it, 25% of it, even 50% of it, that if you want to, you can leave on until expiration. So that way you can have some big winners, but you're not putting all your money in the big winner ideal and then basically playing a lottery ticket and gambling. So have a trading plan. That's really the bottom line. It doesn't matter what trade you're doing. Just because it's low risk doesn't mean it's a good idea if you're not implementing a solid trading plan, a solid trading system. Okay? So, and there's a lot of markets you can go in and you can take advantage of. So, you have the international indices. You got the FTSE, the DAX. You got the Japan 225, the Nikkei there. You got the S&P 500 E-mini futures, which is the US 500. You have the Russell 2000. That's the small cap 2000 on here. You have the NASDAQ 100 futures. And again, these are all following the futures market. So, make sure you're looking at futures charts when you're doing this. And there is a way to actually see a very close chart without having to pay for data fees, and I'll show you that in a little bit. And you also have the Dow, so you can go in and trade the Dow Jones 30. In addition, you can go over and you have the Forex pairs. You actually have 8 different Forex pairs you can take advantage of. Aussie dollar, pound dollar, euro dollar. You got US yen, euro yen, pound yen, and you have the US Canadian and the US franc. So in addition, you got gold, oil, silver, natural gas, copper, and corn and soybeans. So there's a lot of ways for you to hop in and take advantage of this market. Stay right there. We'll look at some of those ways. We'll be right back after the commercial break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recent Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, this is Darrell Martin. Welcome back to the Diagnostic Trading Hour here. Again, if you have any questions, feel free to call in 877-927-6648 or 727-446-1044. And we're talking about a few things at the beginning of the show. We're talking about some fundamentals. We're talking about the market and how there's just, there's a lot of things in favor possibly of the market continuing to, rise. The one thing that, they're even talking about a little bit in the Tigers Den over there. The one thing that you definitely want to be looking out for, the one thing that make me nervous about a continued rise, probably almost the only thing at this point, without any, big news announcement coming out. That's any 5 minutes not going to happen. But is the VIX is just, it's so low. And if you go back and you look on the charts, and we can go in and check it out. Let me show you this here. And if we pull up the charts on the VIX, and I'm going to go in and grab there we go. All right. If we go in over here, and we check this out right here. I mean, we're really at the lows that we were at. Right now, we're touching those same lows that we were touching back on, July 19th. Well, let's go over and let's look at what happened around July, 19th. Well, the following day, we had the market do a pretty significant, 50-point pullback there on the S&P, okay, over the next few days. So that happened right when we were touching these same levels on the VIX on the low. So that means greed is at a high. Now, of course, that doesn't mean it can't keep going. So, but that is, that one hesitation. In addition, we go back a little bit further, and we can see what about the previous time that we hit these lows. Well, that was back on the 26th of April. So what happened on the 26th of April? So we back out a little bit on the chart, and we go in, and we look in, and we're going to find the 26th of April. And we had a couple more days there, and then literally we had a big move down from 1402 down to 1260. So that was literally the last time this year that we hit the same, the last two times we've hit this level. That's what we've seen. And so we're definitely in a period of extreme greed, meaning a lot of money has went into the market. And, you definitely want to be aware of that and, look for the potential. We may just go back into that whole range thing we've been doing lately. So right here, as far as just a crash, we'd need some bad news coming out, I think, to really pull it back down to that 1260 number. But as far as could it easily, go range bound like from here down to 1320 and then oscillate back and forth, that is definitely possible. But the market definitely it's screaming right now, and it's been it's had a lot of good solid up days over the last couple of weeks here. So just keep that in mind. That is coming up, and so we should be looking for some big move. Continued either big up or big down literally any time in the next few days, just based on the level of the VIX and how low it's gotten right now. And that's basically one of the best extreme indicators you can use. And we can even go over here and we can back up on the VIX itself and look at when it hit this peak back over here on we'll see June 5th. We back over, we look at June 5th, and that's right there, that peak, and then all of a sudden the market started doing this big retracement. So it was sort of a good clue. Of course, you didn't 100% know that was a peak, but it was definitely the resistance level from the previous support level on the VIX. And the VIX is a very powerful indicator. It's definitely worth, always watching. And it's the implied volatility. And one of the things that we talk a lot about on this show is standard deviations. And standard deviations, there's two different kinds of standard deviation formulas. One includes implied volatility. One doesn't include implied volatility. And the one that doesn't is more like an average true range historical information. It's not incredibly useful. Okay, the one that does include implied volatility, that one is very powerful because it's how far the market expects everything to move, and so you can use that to really help you define levels and take advantage of that anytime that you're trading. So you definitely want to be looking at implied volatility and seeing what can you do to take advantage of standard deviation levels, because again, that's the market's expectation of the move. It's not your expectation. All right, it is not anybody else's expectation, it's not direction, and that's another big thing. It's not direction, it's how far it expects the market to move. And so you can use that for take profit levels, for potential reversal levels, for very solid support resistance, pivot levels, things like that in your trading. And there's a lot of different ways to get implied volatility. You can use the Analyze tab over on Thinkorswim is one way. We're actually going to be making a tool to help you out with this as well. And if you go in and let's just say we look at the S&P for today, and we pull up the implied volatility levels, then what we can do is look at the standard deviations. And basically what we're going to find out is that we have basically a 10-point, 9.5 point actually to be exact, a 9.5 point from yesterday's close expected move on the day there. And so that's really the extent of the move. And then now you go in and you can add one more level to that to see is it really going to blow past that one level. And so if we do, we go in and we look at the level past it. And again, it's yesterday's close, which you're always looking at. Okay, and the best time to do this is going to be right at the close of the previous day, so that way you can get the standard deviation expectation right then. You can look at it later in the day, like you're doing right now, and it's usually going to be very, very on target. But to get the most accurate number, you're going to want to look at it right around the close. And so we're looking at about 21 points for a 2 standard deviation move. It looks like we're not obviously moving that far yet. We're up 12 points on the day. And but let's go in and let's look at that 9.5 point level. And so let me grab one thing real quick. So just make sure I grab the closing price there. So closing price yesterday, 1390.25. So 9.5 points up from that would be 1399.75. And you go in and pull it up and just sort of see what happened right when we hit that level. Let's check it out, because it's interesting how this sort of works out. We go up here, and we hit that 1399.75, and all of a sudden things start going flat. But a little bit of an up move, and then things again going flat. So there's not a whole lot, even though this looks like a big surge. Really, I mean, it's just 2 more points up from where it stopped and oscillated. So that'd be a point where you're like, okay, now I probably want to be tightening my stops. When you're getting to that level, start tightening your stops up. And whether you're looking at 5-minute bars, 10-minute bars, whether you're using, Renko bars or, range bars or Heikin-Ashi bars or however it is that you trade, make sure that you have some sort of, solid trailing stop method. It can even be as simple as an average true range trailing stop. But you want to have a target profit level. And so I found that the standard deviation levels are the easiest way and the most objective way to look at what the market expects to happen. If more than that happens, then great. But I can also use that for my take profit levels when I'm trading Nadex. And so I go into Nadex and I'm like, okay, well, how far do I think it's going to move? So if we open up at the beginning of the day, so we'll get today's open, okay? And we go over here and we'll go to, again, just today's opening price. Let's just say at the market open, all right? And so at the market open here, and that'd be 8:30 Eastern and 7:30 Central there. And we go over here, market opens up at about 13, let's see here, 97.25. And so, we're not expecting just a massive upsurge, but I'm expecting a few points. So I could go in and be looking at a 3 or 4 point move and go, okay, well, how could I take advantage of that 3 or 4 point move with the lowest risk? And then that's where I might go over and go, okay, well, let's look at the the binaries that are available for the day. So I can go over and look at US 500. And again, binaries or spreads, you can choose which one you want. And then I can literally pick one and go, okay, what would happen if it moved a few points? And the trade would, say if I pick this trade right here, and you want to find the one that's kind of the biggest change in price, okay? So you're going to want to find that trade right there. So I'm looking, okay, this one goes from 450 to 8. This one goes from 11 to 19. This goes from 23 to 37, 41 to 57. So really the best bang for my buck right here is looking like the 11 to 19.50. So that'd probably be the trade that I would, choose either, or the other direction. But it depends upon, what direction you're looking to go. And if you wanted to trade directionally with it, then that's how you could trade it. And you're going for that few points and take some profit. And like I said, you could leave the other position on or let it run. Now that's the binaries, okay? And that's a double your money in a 3-point move trade. That's what you're looking for, okay? Now, the other option that you have is you can look at the bull spreads. And the bull spreads are really, people, it's sort of funny. The binaries are really simple to trade, and so people they jump on them like crazy. But they're harder to make money with because you got to have that really, really good plan because it's at the end of the day, it's a true-false statement. So, and one tick can, kick you out. The bull spreads are a little more complex to trade, but in my opinion, they're a lot easier actually to trade. So they're more complex to understand, but they're easier to trade. The binaries are easy to understand, but more complex to trade. So if we go and look at the bull spreads, really, I call them box spreads because if you put it on a chart, it's a box, all right? And if we go in there and we pull them up, it's really simple. You're basically trading like you're trading the underlying market, okay? So you're going in, and if you're looking at the S&P 500, currently quoting, let's say, 1402 right now, you're going to want to try to find one of the spreads that's, really close to that level, so that way you can have as low risk as possible on the trade. And so if I go in, okay, here's a 1400 one expiring at 3 o'clock. So if I want to look at this trade, and let's say I wanted to buy, okay? Then I go in to, put a buy order on this trade. My risk on the trade is 33. My profit's, 67. But here's the thing compared to a binary. If the market basically doesn't do much of anything, okay, let's just say it moves up like a point, then I get my money back. All right. So if the market expires, right now the market's at 1402.25. This is at 1403.3. So $1 a premium in there. If the market expires at 1403.3, then I'm going to get my $33 back. Whereas a binary has to actually move far enough for you to be able to profit at expiration. Now, again, you can get in and get out. They're very, they're volatile, which makes them great for flat markets. But as far as, not having as much risk on movement requirement at expiration, the binaries are great. And you're looking at more of when you look at the underlying chart, it's going to look a lot more like the actual underlying market. So, to see just how it moves, you can pull up the charts, and there's a chart button right there on Nadex that you can take advantage of. And let me show you one that's, this is actually one of the tricks I was talking about earlier. If you don't have a futures platform, and I definitely suggest you get access to that data, but let's say you just don't have one right now and you're looking for a way to monitor the market itself, then you go in and you find what's basically called the master spread. It's also under master spreads right here, okay? But to know what the master spread is, it's really simple. If you're looking at all of them, it's the one that has the widest point value, okay? So in this case, you had 100, 100, 300, 400, 800. So you look at that 800 one, you click on the chart, and this chart is basically going to be almost exactly mirroring the S&P 500. Even the price is going to be right there. The S&P is at 1402. It's just showing a 1402.1 right now. Okay, and the reason for that is it's basically the master spread is what we call in the money. Okay, so the market's going to be very in the center of both of the strikes, and so since it's, you could call it, you can call it deep in the money, I guess, if you're looking at your normal options, but in a box spread, you're basically looking at the closer you are to the center of the strikes, which in this case is 1350 to 1430, then the less premium there's going to be in there. And also the nice thing about the master spread is it trades the longest, along with the dailies that open up at the same time. But so you can go in there and you can use a lot of the features that the charts have, and so you can choose what kind of style you want. So you can go in and you can say, do you want candlesticks, or do you want line charts, mountain charts, open, hello, close, basically bar charts. You can say, do I want to plot the mid, the ask, the bid? So usually going to plot the mid, but let's say if you've bought a trade, you want to be looking at the sell price, and you might want to hop over to bid. So that'd be a reason. Or if you sold, then you might want to be looking at the ask to see what price you can buy it back at. And then if we go down here, you can choose your cursor type. I choose crosshair. I think that's the easiest. So that way, whenever I'm moving, it makes it easy to find out where I am. Or if I choose circle, then it's a little harder to find out. It's just not as visually, standing like right there in front of you. And then the other thing that you can do on here is you can, add or remove the grid lines, and you can, add or remove the current price tag. So stuff like that I usually leave alone. Looks good. And you can also add indicators on here. Right there. And so in the indicators, you can go in and you have average to range, you have Bollinger Bands, you have chalk and volatility, commodity channel index, directional movement, you have exponential moving averages, and they do have standard deviation, but again, this is going to be more of your ATR standard deviation, not your implied volatility standard deviation. Okay, so it's sort of like Bollinger Bands. So it has the same thing. It says standard deviation right there, but again, it's using historical movement, not implied volatility movement, and it's a cool formula. I like it, but it's not the exact same thing. So, and then we go right here, and you can actually, to learn more about the indicator, there's a little information button. Just click on it, and they'll actually go into it. The Bollinger Bands are envelopes based on a moving average and a standard deviation. The standard deviation makes the band widen or narrow according to how volatile the market volatility. So that's historic volatility. Okay. The first parameter is the number of days for the moving average. The second parameter is the number, and when such days are with bars. So if you're intraday, you're looking at bars. The second parameter is the standard deviation. If 95% of the prices fall inside the band, it suggests prices are flowing a normal, what's called a Gaussian distribution, or bell curve. So we've all heard of the bell curve. So it's inside the band, that's a bell curve. And then the band, basically you can use that information to learn how to use these indicators. And you got your MACD, and you even have some interesting ones that I've even never used before on here. So they're adding a variety, and they're always adding new stuff. And if you have ideas, if you see things that you want, you can click over here on the little envelope tab and send them a message. And I've actually sent them a few ideas, and I've seen them. I don't know if it's because I sent it or other people sent it or a lot of us sent it. Probably a lot of us sent it. And and they implemented the ideas and they put them into the charts. And one of the things they recently did is they actually added the charts to the app. And so the iPhone app or the Windows app or the Android app, any one of those mobile phones, you can actually hop on now, and you can open an index account from the app. You can also manage your positions, look at the charts, and everything else right there on the app. The other thing you can do is you can go in and you can do trend lines, fib lines, Gann lines, and make notes, and you can save your template, and that's huge. All right, we'll hold right there, folks. We'll do a wrap up here right after the commercial break, and we'll wrap it up for the day.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, well, folks, welcome back to the Diagnostic Trading Hour here with Darrell Martin. And I'm just looking at a few things. Oil has been running up like crazy, up $2.13 on the day, which is basically a 1.5 standard deviation level. And it paused right there along with everything else, with the S&P pausing, and with the advanced decline starting to pull down. And so, just some possible trade setups that you could do if you wanted to fade this trade, which would be a pretty crazy thing to do if you're trading oil right now, because it's just so, volatile. Every tick's worth $10, on down the list. Well, what you could do is you could actually go in and you could sell an oil spread, such as the 230 spread that is expiring there. And it's going to expire at 2:30 Eastern time. And you can go in, and it's already starting to move down, so I'm going to go ahead and hop in on the trade and place my order. It was $290. It's at $350 right now. So basically $350 risk if I did 10 contracts. Okay, so you can only do one if you wanted to for just $35 risk. And on that trade, what you're looking at is if oil goes, basically, if it went against you by just 35 cents, okay, which is not a big move, you'd be knocked out of the trade if you're trading oil, if you had a $350 stop loss. With this, it can go up, and my risk will not increase, and won't go past $350 no matter what, no matter how high it goes, and I have basically the next hour and a half to go in and let the market come back down and possibly profit. And there's different ways you can even hedge this trade off. Okay, so one of the ways you could do it is you go over and you could look at, and this is just example here just to show you some ways to trade here, is you go over and you could look at oil and you could look at the binaries, and you can find the dailies that expire at 2:30 at the same time there. Okay, and basically you're going to be looking at around maximum loss of where our ceiling was. So if we look at that position, we sold it at 94.50, or we sold it at a little bit lower, 94.16 there, but 94.50 is the ceiling. So what do we have available for us if oil were to take off? And is there any way that we can help hedge some of that risk? And so you could look at a variety of different trades. One of them would be, this $95 one would have a very, good risk reward for you in your favor. And that'd be, I guess $7.50 risk to make, $92. So if, let's just say oil did surge up, you could go in, you could add in 4 contracts for a $30 risk. All right. And if oil, let's say this goes above 95, which it's been there lately, that's not obviously just a crazy idea that it's going to be there. And so if it does decide to go ahead and do a little bit of a rally and move that high, that'd definitely be a high for, the recent movement in the market, but, not just a, big high overall. Then you could go and you could place that trade, and you have, basically for about $30 or so, you have a trade that will make more than the risk in your spread. So if oil were to do a surge, let's say the market decided to do a last-minute surge at the end of the day, oil will decide to ride along with it, then that covers it, but you only added $30 risk. But again, if it goes against you and it makes that $350, or actually it'd make a little more than that, make about $380, it'd cover all the risk in your trade on the binary. Of course, it'd cover all the risk in your trade on the spread. So, and one of the trades I did the other day, I combined spreads and binaries on euro-dollar, and the euro-dollar went against me on the spread, but on the binary that I had to hedge it, as it was flying up, I'm like, okay, trade's not working out, and I was actually able to close out the binary and the spread. I didn't wait till expiration. I just, basically the binary was covering all the risk in the spread. I closed both out and was able to walk in that profit and basically, hedge my risk off and not have to, take any loss on the trade. So it was pretty cool. So the combined hedge trade really is a way that I love to do things. I love to, hedge, spreads with binaries. I love to hedge underlying markets with spreads. And there's a lot of ways and a lot of things to do. Keep tuning in Diagnostic Trading Hour, calling with questions, and I'd love to go over different ideas and ways to do things. Anyway, so quick market wrap up. We got the S&P, and it is up right now 12 points, and things are moving. So we'll see you tomorrow. Y'all have a great day.